Chair now recognizes the gentleman from Missouri, Mr. Luetkemeyer, Chairman of the Housing and Insurance Subcommittee.
Thank you, Mr. Chairman. Secretary Castro, as a former bank examiner, one of the things that we would do when we went into a bank was to look at a capital account, look at its activities, and if it was short on capital, we look at its income stream, and we would find ways to encourage the bank to increase its income, cut its expenses, reduce its liabilities. And it seems as though you're doing just the opposite of those things here with what you're doing. What is the past due, for instance, what is your past due ratio right now with your loan portfolio?
I'd be glad to get you that number. I don't have that number in front of me.
Mr. Castro, you're telling me as Secretary of FHA, you don't know the past due figure of your own book of business today?
I would be glad to get you that figure.
Oh, my gosh. How can you tell me then anything with confidence today? Anything you say today with regards to income for your agency, can we take with a grain of salt?
The fact is that our books of business from 2010 on are some of the strongest books of business that we've had in FHA history.
Mr. Castro, if you look at your income stream and you take out the $1.7 billion that the taxpayers, who are the ultimate backstop on your agency, are they not? Yes.
Actually, that was the first time in FHA's history
so the ultimate backstop
then,
the ultimate backstop for your agency are the taxpayers, correct?
Again,
who paid the last bill?
FHA today has $46 billion in
Who paid the last bill, Mr. Secretary? The last bill is paid by the taxpayers, so they're ultimate backstop. You can't argue that. So now we have a whole lot of other income to your agency. What is the net income this past year for your agency? And when I say net income, take out the settlements. What income did you actually have?
And we provided this information to the Chairman. If you take out the settlements of $2.2 billion and the mandatory appropriation of $1.7, that was $3.9 that was backed out. Even with that, I may note, first of all, it's still a positive capital reserve ratio. But secondly,
what is the net figure? What is the net income figure for last year?
Yeah. To go back to your question before, our serious delinquency rate this year is 7%.
7%. Okay. Now, next question. What is your net income for the 2014? Do you know yet?
I can get you that figure momentarily.
Oh my God. How? Okay. We've got an income figure that we don't know for sure, and so how do we know? By cutting your revenue source 40%. That you're going to even be in the black this next year. When you have a 7% past due ratio, what is the normal default rate on your past dues? Do you know that?
In fact, we've improved our default rate significantly.
You know what your default? Do you know what the percentage number is?
The default rate today has fallen significantly. It is less.
Do you know what the default rate is? I know the numbers in your testimony. I saw them, but it's a percentage of the figure that you gave us. But I want to know what the figure is.
I want to make sure that I'm accurate, and so we'll get
ballpark figure. We're just talking ballpark.
It's less than
1%, 2%, 10% of your past dues are going to default totally.
It is 7.2. It's less than 10%.
Okay, so 10%. So 10% of 7%. You're looking at 0.7% of your portfolio is going to go south on you, roughly. So you're going to lose 0.7% of your total portfolio. If you do that, your net income, which we don't have a clue what it is today, isn't going to cover your losses if you take a 40% cut on your income. I'm sorry, it just doesn't compute.
I disagree. And I would also note that these projections are not the projections of FHA or HUD that are made on an annual basis to determine our capital reserve ratio and project out where it's headed. Those are projections.
Yeah, Mr. Castro, I'm asking very simple questions here. If I'm a bank examiner coming in to examine the HUD, you're on a problem shop list, if not closed, tomorrow. You're gone. Or you're going to have to recapitalize. This is totally unacceptable. Question for you with regards to this. You don't price risk like a normal private sector insurance, mortgage insurance company does. You just have a flat fee. And I notice that, where's it at? Here it is. I saw a graph the other day of the private sector mortgage insurance folks, and anything under, on a $250,000 home, a 30-year mortgage, 3.5% pass-through rate. Anything under 680, they're upside down on this, and they can't. You're competing with them for that business. So basically, you're taking on, if they don't compete for the business, you're taking on the most risky part of the whole portfolio, because they can't afford to insure at that rate that you're insuring it for.
I wanted to make sure that we're accurate, Congressman. Our net income in 2014 was approximately $8 billion.
The time of the gentleman has expired. The chair now recognizes